Welcome to RegTech, a place for bytes and banter, where we talk about real life in tech for techies and non-techies alike. We're Natasha and Saloni, RegTech co-hosts and software engineers. We have our guest speaker, Martin, a recently retired software engineer. In the last episode, we talked to Martin about the tech community culture of open source with his experience in the Python user group tech community. In today's episode, we'll be looking into how he managed his finances to retire relatively early as a software engineer. Yeah, but now I kind of want to segue into your new label as a retired engineer as well as a dad. But to get to this stage of retirement, obviously, it has to do a lot with how you manage your finances. Otherwise, you'll be working till the end of time.
Yeah.
So we wanted to ask you, in your perspective as an engineer, what is your take on how you manage your own finances?
Mm-hmm. Well, we've already spoken about this before the talk, right? So my case, as with everything that I do, is probably a little bit off the beaten track, right? And unconventional. My retirement is not fueled by any of the work that I've ever done. So I've coded the code base for 6 startups, of which probably 4 are still alive. I have shares in certain startups, but none of that ever gave me a windfall of money. So that's not what worked out for me in the end. Like, all this coding was fun, but it wasn't lucrative. I mean, I still make good salary, I guess, but nothing crazy. Nothing like you hear from Silicon Valley engineers or anything like that, right? Pretty normal salary for Singapore terms. What I did is I read the Bitcoin white paper 13 years ago. I understood the implications of it, and I sent an email to my 5 best friends in Germany, and I said, guys, I found this thing, we need to start buying this. And so then the 6 of us all started dollar cost averaging into it. So there's this term DCA.
Yeah.
Technically, it's not right to say that this is dollar cost averaging, because in reality, dollar cost averaging means I have a lot of money. How do I spend it? Do I spend it all at once and buy Bitcoin all at once? Or do I split it up and every month or every interval I buy the same amount? That would be dollar cost averaging. I didn't have a lot of money, but I still, every month, actually in the beginning every week, I spent the same amount of money to buy Bitcoin, right? I asked myself, how much money can I flush down the toilet without affecting my lifestyle at all? So then, we waste a lot of money at Starbucks or cinema or like fancy restaurants that are not necessary, and all kinds of crap that we buy. And I decided maybe I can flush down like $40 every week.
So it's some money that you're okay to lose.
Yeah, exactly.
Basically.
In crypto, that's what everybody says, right?
Yeah.
Don't invest what you can't afford to lose. And at the time, I mean, that was 13 years ago. Very humble beginnings for me, right?
Yeah.
I was like sleeping on the floor at my wife's house because there was no room, and just started my own company. And basically, my salary was whatever was left at the end of the month from our profits. And that was not much, right? And so some months I just earned like $500, and then the next month maybe I got a bigger project and I earned like $3,000 or $4,000, right? And I mean, obviously that grows and grows and grows as you get better known and your portfolio speaks for itself. But yeah, I just kept buying every single month, no matter if the price goes up or goes down, just buy. So to me, in the Bitcoin community, on crypto Twitter, people call this DCA, dollar cost average, although technically it's not DCA, right? But it's a bit scary because when I started it, the price was at the Mt. Gox peak, $1,300 or so. I started buying, and it crashed down to like $200.
Yeah.
But actually, when your goal is to acquire more Bitcoin, you are happy about that. As it went down, for my $40, I got more Bitcoins every month, right? So I ended up getting much more than I anticipated. And then after 4 years, the next bull run happens. And then that money that I invested became 10x more. So now I had the psychological effect that, actually, if I took out the money that I had already invested by then, just so that psychologically I can tell myself, if Bitcoin gets banned or crashes or whatever gets hacked, at least I got those $5,000 that I spent the last 4 years. I got it back, and then I bought myself a MacBook or whatever, or some nice Christmas. Usually I buy nice Christmas gifts for all my friends. So
I want to be a friend.
And I just kept doing this all the time. I never really touched my stack, right? And then suddenly you have this big pile of worth there, and so then you feel more confident to increase the amount of money that you can flush down the toilet. Also, you probably progress in your career and you earn more salary as well. So I would say like 5 to 10% of anyone's salary should be put away for savings. And now people will say, oh, but you can't do this now anymore because Bitcoin has done its thing, but that's not what I believe. I mean, when you think about how many people do own Bitcoin among your friends and family, probably no one, right? It's still incredibly niche. And but now we have governments playing around with it. Like in the US, there are entire states who make new laws to make sure that people are always allowed to self-custody their own coins, to make sure that mining operations can function properly and so on. So this thing is still growing and thriving. And that you have to think about Metcalfe's law, which is the value of a network grows exponentially with the number of nodes in the network, right? When you think about the telephone network, when there was in the beginning, there was, I think, the US president and Russian president, they had a telephone line. It's cool technology, but not very useful as a network. When every household in the world has a telephone, it becomes incredibly disruptive technology that is incredibly valuable. And money is a network, actually, right? The more people use the same kind of money, the more valuable that kind of money becomes and the more useful. And that's why being the country that has the global reserve currency, the US dollar, makes the US dollar incredibly powerful, because everywhere in the world, every government wants to have US dollars so that they can buy oil, right? So the network effect is incredible. And so Bitcoin would be even better, right? Because the US can use the US dollar as economic warfare and push down other countries. Bitcoin would eradicate that. There would be finally a currency that cannot be manipulated by any one government, right? And so it becomes a win-win situation for all the governments in the world, right? So I still believe that there's the real mainstream effect of Bitcoin hasn't happened yet. When you look at the adoption S-curve, we are probably still at the very bottom where it's just going ballistic, right?
Early adopter stage.
Yeah, and so when you just think about Metcalfe's law and these things and game theory of the first country who prints money in order to buy Bitcoin, in order to then escape hyperinflation, will be the country that will be the most wealthy after hyperinflation globally happens and so on, right? So then all other countries will do this as well, and then it becomes like a black hole that soaks in all the fiat money, and in the end, the only money that has any value is Bitcoin, right? So I think this will eventually play out. So in my mind, the 4-year cycles of Bitcoin will continue to do its thing, and anyone who still does this dollar cost averaging today will probably experience quite a big appreciation of their investment every 4 years, right? So yeah, I mean, it's such a silly, stupid, simple thing that I did, but it worked out, and I still think it will work out for other people as well. Talking about managing finances, right? I mentioned this earlier as well. There's this app, You Need a Budget.
Oh yes.
YouNeedABudget.com. I'm not affiliated with them. Totally worth the subscription.
You have the book?
You
I have the book.
Oh, they have a book?
They have a book which explains the philosophy
Oh,
behind
yeah.
the app.
Exactly. So it's a super slick app, and you basically key in all the money that you spend, right? And then when you key in that you got salary, then you have the money sitting there on top as money to be put into buckets. So then you have to come up with all the buckets. What do I actually want to do with my money, right? So first you create all the buckets for your monthly bills, electricity, internet, mobile phone, and whatever, right? These things reappear. Then you create buckets for not so monthly things, I don't know, buying clothes, going to the hairdresser or whatever. And then actually I have buckets for birthday gifts for all my friends, Christmas gifts for all my friends. If you add this up, that's a lot of money per year that you spend on gifts actually. But does anyone plan for that? No, right? No. When Christmas comes along, you're like, damn, I need to buy so many gifts. I didn't save the money for that, right? So if you create all these buckets, also then vacation, you probably want to go on a fancy vacation, which costs, I don't know, $3,000 to $4,000. Maybe you want to buy a new MacBook when your old one breaks down. You have to plan for that. You will eventually need a new MacBook, and these things cost $8,000 nowadays, right? Yeah. So, and then you can set the date, like I want the new MacBook 4 years from now. Then the app will break it down into monthly payments that you theoretically need to put aside so that in 4 years you have $8,000 for the MacBook, right? So then every month when my money comes in my bank account, and that's the problem, right? When people don't have a savings account, they get salary and they splurge. They feel like, oh, I'm so rich, I can buy all kinds of things that I don't really need. But actually, this app forces you at the beginning of the month to then take your salary and put it into all the buckets that you have created, and then you realize, oh, I'm actually living above my means. I don't have enough salary to fill the monthly little drops into each bucket, so that later on when I need that bucket, I have the amount that I need, right? And that really changes your perspective on consumerism totally, right? Every time, like when I go to like a restaurant or whatever, can I actually afford grocery shop or like restaurant eating out? There's a category for eating out. Like this month, I have actually already used up my budget for eating out, right? Can I afford to have one more fancy meal at Heidi Lau or whatever? Probably not, right? That means if I eat Heidi Lau now, I have to take this money away from another bucket that comes much later. Usually my MacBook bucket, because that's always far away, and it is a lot of money that I might not need at that time. I can always wait a few more months before I then actually buy the MacBook, right? But yeah, this app, if anyone has trouble having money left at the end of the month for savings, right? This app will get you there. And then you have money left for savings, so then you can put that money into Bitcoin, right?
So have you been using this app since the
Yeah,
beginning?
yeah.
Oh.
I've been using this for 8 years or so. Yeah, and when I came to Singapore, I was always broke. When I started using that app, literally like 3 months later, I was like, wow, I have money. At the end of the month, there's money in my bank account.
When you start giving work to every single cent of your money, then that's when you can actually see how much you are actually wasting, how much, and then you also care about like you work so hard to make this money, you want to put it for good use.
Exactly. Yeah.
So that's the idea behind.
Yeah, it makes you plan your future, right?
Yeah.
What do I want to do with my money? But it's just a psychological effect. Like you get a salary at the beginning of the month, and you actually know you can't touch this, right? It's already planned away, and then it makes people realize that they live above their means. You usually not see that. Yeah, but I guess as you can see, it's nothing fancy. I've done no fancy finance stuff. It's simply exchanging in my opinion, worthless fiat money to a more valuable store of value, which is Bitcoin, right?
But it's amazing how in the beginning you believed and you understood Bitcoin, such that even when it went down, you had the understanding that it's just one of the lows. Yeah. It will go up. Because people might panic.
At that time, the crypto community on Reddit, or Bitcoin, right, was very hilarious. Like the memeing was so entertaining. So as it went down, the memes got more funny. And so you're just like browsing every morning, and you see all the cool memes, and you're like, okay, everybody's having fun. It's probably not such a big problem. Maybe I should be worried. But yeah, the white paper is worth reading. The Bitcoin PDF. It's only like 9 pages or so, and I think the only difficult thing in terms of computer science is Merkle trees. So when I read the white paper, I went to Wikipedia and I read about Merkle trees. Did some online tutorial that makes it visualize a little bit, and so then I intellectually understood what Merkle trees are, and then you can actually fully understand how this money works. Isn't that unbelievable? Can you understand how a central bank works? Nobody can understand that. Nobody knows how the Federal Reserve Bank works. Where does the money come from? Nobody knows where the money comes from, right? So we have a system there that just explains an entire financial system in like 9 pages that are accessible to anyone. You don't need to be a rocket scientist to understand. That to me is already proof enough that this will prevail, right?
I've been doing dollar cost averaging with ETFs.
Yeah, that's also good.
But I mean, it doesn't go 10x.
Yeah.
But
So my annual interest rate is on average 460%. I don't think you can find an ETF that gives you 460% per year.
No.
I mean, people will always say, yeah, but you got in early, and it appreciated 20,000%. No, but I still think 12 years from now, somebody who started now will also experience 5 to 10,000% appreciation,
Yeah,
right?
yeah.
So don't dismiss this as, oh, I missed the train and you just got lucky because you got in early. And anyone who says you just got lucky, I challenge you to hodl. Hodl means to hold on to
yes.
your coins and don't spend them. Hodl through 3 major crashes, right? It
Yeah.
crashes
Yeah.
85%
Yeah.
after each peak. It crashes 85%.
Yes.
And then have the balls to not sell, panic sell on the way down is not so easy psychologically, right?
Yeah.
Yeah,
I
but
think the caveat here that you're also putting out is, one, make sure that it's money that you are willing to flush down
Yeah,
the
yeah.
drain, and that starts with like budgeting and knowing how much you can even put aside.
Exactly.
Hence, you need a budget.com.
Yeah.
The second principle here, and I think maybe it's because of a trade as an engineer also, the tendency to want to look into what you're actually investing.
Yeah.
I think the first time you read the white paper, you went the extra mile to understand how a blockchain even works. That was like my journey as well, but I
Yeah.
took it down the research route because I was like, this is really cool. I don't want to like look at blockchain more. But to have that interest to want to pursue that more, understand the mechanics behind it, and know that this is a sound technology and it's never going to lose its value. Even though like right now that there are cycles of fluctuations,
Yeah.
but these are normal. Like you said, it's a cycle.
Yeah.
It happens iteratively,
Yeah.
and there's a reason behind it that's
There's a reason,
driven, both by the way that
The halving, basically.
Yeah.
Yeah.
The halving and,
Yeah.
and stuff like that. And you also know about theories beyond that. For example, adoption curves. We know that
Exactly,
it's
yeah.
like the early adoption stage. At each point of time, wherever you might feel some sort of anxiety or panic, you
Yeah.
go back to logic. You go
Yeah.
back to like, what is the long-term outcome here? So that's the second principle that we're really
Yeah.
looking at here.
Exactly.
And the third, to also like not falter when it comes to like those dips. I think when it comes to investment, basically we're talking about investments here, right? It's really about that psychological aspect going in to invest. I think like for me, I did try out like trading in crypto for a bit. I did try out stock trading for a bit, and the thing is, I knew my own psychological demeanors and tendencies through that small experience. I put $3,000 aside and tried it out. I knew I panicked like way too
Yeah.
much, even if it's rooted in logic. So that's why I turned to like investing in more tangible assets. So
Yeah.
I invested in housing in Singapore.
Yeah, that's
So
probably
I
good,
think
yeah.
it's also a lot about like knowing yourself, but also letting yourself experiment,
Yeah.
going through those principles, and then okay, even if I have those principles in place, this is still not really for me.
Yeah.
Then instead of Bitcoin, there's something else that you can try.
Right.
We're not saying here that
No, no,
everybody
yeah.
needs to go to Bitcoin, but it would actually be good if everybody did. But we're also saying that if you want to like make that investment, follow these principles and do what is best for you.
Yeah.
Don't be afraid to experiment, but experiment with money you can put aside.
Exactly.
That's one.
What you said about trading is also very important. I mean, I've been reading about Bitcoin every single day of my life for 13 years for at least 2 hours per day. So at the beginning, I was completely obsessed with it, right? I would literally have sleepless nights where I just can't sleep and I would just browse and read more stuff and read everything about it. I have every single Bitcoin book ever published in my library at home. I'm actually gonna build an LLM. I will scan all the books, vectorize them, and I will create an oracle that you can ask any question about Bitcoin and it will reply back based on the text in those books.
You're building that, or
That's going to be one of my hobby projects.
Nice.
Oh, nice. Looking forward to it.
Well, I don't know if I can publish this because technically it's copyright infringement, right? So I'm going to reach out to those authors. I think most Bitcoin authors are anarchist, crypto cyberpunks anyways. They wouldn't care if somebody does this, I think. And I mean, in the end, you still wouldn't be able to read the actual pages of the book that I have scanned. You would only just get answers.
Yeah.
So people will still have to buy the original books if they want to dive deeper, right? But anyways, speaking about trading, so I've been obsessed with it, right? I've looked at the Bitcoin price every 10 minutes the first few years, right? And you would think that, you would think that, I know everything about it and I've seen the price movements, I have a feeling for it. No way. Every single time when I told myself, now I will sell a little bit so I can buy back when it dips, or I will put in a little bit more because it's gonna appreciate soon. Not once have I been right. Every single time the exact opposite of what I thought would happen happened, right? And so at some point I had so much money that I can do these playful things and try a little bit of trading without losing everything. but it never worked out. So even somebody completely obsessed with this and having a lot of spare time, if you're not a professional trader, don't touch this thing as a trading vehicle. Do not touch this. Just do DCA. Don't worry about the price and forget about everything else.
Yeah, for sure,
Yeah.
for sure. Yeah. I think that's really good advice. Like, could be DCA for anything. Like for Saloni's case,
Well, there's this
going
famous
ETFs.
quote from, I think, Warren Buffett, right? Time in the market beats timing the market, right? Patience.
Yeah,
Patience.
exactly.
Just have to bet on the right horse, right? How do you find the right horse? Is it Nvidia now? Is it Tesla? Who knows?
Yeah. But definitely just do your due diligence,
Yeah.
and try not to succumb to like the lows of it.
Yeah.
Yeah. Try also not to succumb to the highs of
Exactly,
it. Yeah. As you said, not professional traders. You shouldn't be reacting. Should be just like a disciplined kind of like investment.
Yeah.
Thank you for watching the second part of our interview with Martin. In the next part, Martin will expand more into his financial worldview on how he views his startup, his job as a software engineer, his crypto investment, and more as diversified assets. Stay tuned for the next bi-weekly episode by subscribing to our channel and following our social media platforms. And remember to like and leave a comment if you enjoyed this episode. As always, this was RegTech, the place for bytes and banter. See you in 2 weeks!